Thanks for taking a look at our webinar special here. We call this the Cattle Market Basics. This is just going to be a general primer on the livestock industry, and this one focusing on cattle themselves. We get quite a few questions in the office here on the cattle market itself and just general questions about the industry, and it shows that perhaps we have a vacuum of information that we need to fill here as far as general basics. What drives a market, what drives production, and those issues here. This will not be an in-depth outlook on the 2012-13 pricing picture. This is simply going to be some general discussions on what moves each segment of the industry here as well. Now, the base producer is called the cow-calf producer. They have cows, which are mothers on the farm, and they generally sell those offspring, in this case, of course, calves. Now, as you can tell by this map here in the upper right-hand corner, actually a pretty wide distribution as far as where producers are located in the U.S. For most of these producers, the cattle operation is not the main driver of their income. The average herd size is just over 40 head per farm. That means there's quite a few operations, maybe just located outside cities and in rural areas with maybe 5 head on farm, which kind of offset the general concentration of this industry here as well. Now, generally, cow-calf producers, they're simply motivated by two main drivers. Number one is going to be the availability of quality forage. What type of moisture situation is laid out here? Now, here's the drought monitor as of last fall, back in October. And as you can tell, there was severe drought in some of the key areas, running from Texas up through southern Kansas. So keep in mind, as far as the industry, we are in a recovery phase now. Once you look at this updated chart showing April moisture conditions. And obviously that drought has mitigated in much of this southern plains area here. So with that in mind, we do have quality forage available this year and very high prices, and perhaps producers are looking at expanding, taking those first few steps here. Now, in addition to this moisture situation, we also look at availability of hay ground. In this case, you can tell that acreage that was in hay has declined almost 6 million acres since 2005. Now, USDA's latest surveys suggested producers do intend to hold back a little more ground this year away from feed grain production. We're not quite sure if that actually will happen, but keep in mind the general mindset right now is that the base producer would like to expand. And as you can tell by general cow inventories, we have been in liquidation here since 2006. And this number here for 2012 certainly will be the lowest one as far as history. Now keep in mind, this doesn't mean beef production is the lowest in history. That's a separate issue here. We put in more pounds per calf now than we did 10, 15, 20 years ago, of course. So this kind of offsets a good chunk of this issue here. The other thing to keep in mind as far as this chart, keep in mind, even if producers start expansion right now in 2012 and they breed those extra heifers they held back, they won't give birth until 2013. They'll be marketed as fall calves in fall of 2013. That actually won't affect the cash cattle market until mid-2014. So keep in mind, as far as beef production, we will have a decline here in 2012. Again, a further decline in 2013, and even tighter numbers into early 2014 here. Now, as far as the longer-term feeder cattle supply, you can tell in 2011 we had a good decline from the lower 2010-based calf herd, and we now have another good decline for 2012 in feeder cattle available to feedlots. Now let's take the same chart and just look at the past few years. Here it is on a quarterly basis. As you can tell, for most of 2011, we ran about 2 to 4% lower feeder cattle supplies available to feedlots. Right now it's sitting 4% lower, and in the coming quarters that number will dip to 5 to 6% lower than last year. And based on prices, here's October fall calf prices for 500-pound steers. In this case, you can tell we had a dramatic rally in 2011 prices to $147 last fall. And guess what? Current numbers right now are actually just under $200. So keep in mind, as far as overall pricing, the market is reacting, giving producers clear signals to start expansion. The middle phase of beef production, though, is the cattle feeders. They buy those calves and determine at various points in the year when to sell them. As you can tell by the map here, these are located mostly in key concentrated areas in the plains. Now, as far as placements, we generally place a lot of those fall calves, which are just coming off of weaning, which means separated from mother, between August and October. And that's why we have that big bulge in supplies in the summer, and therefore the lowest prices of the year for fat cattle in the summer as well. As you can tell by this chart here, judging by the 2012 numbers here, placements, well, they've been pretty close to last year levels in the past few months here. Keep in mind, based on those small feeder cattle supplies which are available to them, that will start catching up to this industry here between March and June. And we will see placements take a good dive in the coming months. That will tighten up the supply of cattle available at the end of this year. Now, marketings of available cattle outside feedlots, well, as you can tell by this chart, generally pretty similar to last year levels. Those numbers will start to take a dip, as I said before, at the end of this year, after these placements decline in the coming months here. Now, this chart shows a seasonal nature of this live cattle market. As all those marketings come due in the summer, we have lower prices. Now, one thing to keep in mind here is the green bars, which are this year's live cattle prices. They peaked a little earlier than usual. And we also have to keep in mind that may also imply a seasonal bottom earlier than usual in this market. So let's keep this in mind as we go to the next few slides. Overall beef production, as I mentioned before, doesn't correspond with beef cow numbers because we market those animals now at higher weights. But for 2012, we are going to have a 3% drop, and we will have another drop in 2014. Now, the next phase, packers. These people are more middlemen. They do not determine beef supplies in the bigger picture. One problem they have, as we noted before here, we have a shortfall of available live calves and live feeders. This is a live animal-based deficit we have right now. And, well, beef packers, they have a problem here. We're giving them less numbers through the front door, but the market is really, up until recently, had not been making any changes in demand. So that meant they had to scramble to find those available live cattle numbers and pay higher prices for live cattle. So you can see their spread really took a dive in mid-part of 2011, and it really hasn't recovered much since then. Now, here's a chart just showing what's going on as far as profits in the latest week. It shows you why they're losing money right now. Well, the latest week shows they're making $35 per head over their variable cost. That does not account for the $125 to $150 per head fixed cost. So packers have a problem right now because we have a meat deficit, or I should say a live animal deficit problem in the industry. And they will continue to lose money here most of this year. And they're stuck right with this issue right here. They are simply middlemen playing the spread between live cattle prices, shown in the red, and wholesale beef prices, shown in the green line here. Now, the last issue we have here in this industry as far as production, then moving into pricing, is demand. The simple fact is we offer this product right now not knowing exactly what demand will be for that product later on in the year. Now, beef demand does have some issues which drive it. Well, number one is the economy. Because beef is a premium, high-priced product, it does have a moderate correlation with how well the economy is doing. The green line on this chart is the economy, GDP growth, and the blue line is employment. And based on our own models of cattle demand, which are shown in the red line, well, it kind of does follow the issue of a recession is negative for cattle demand, and we have expansion in the economy, which is good. Now, let's go back one more slide here to this one right here. Sorry about that here. And we're going to go back to this one right here. Now, in the last few weeks, we have had some significant problems with this lean, finely textured beef issue here, and demand has taken a hard fall, even though the economy is still doing okay. Also pressuring prices right now are high gas costs. Now, as far as pricing and supplies, keep in mind here 2011 and 2012 are both trading a little higher as far as current prices than where they would be based on normal supplies here. So we have seen declines in both supply available to the consumer, and they've actually been buying this meat at a higher than normal price. We still have very good demand in the big picture. Demand has slipped in recent weeks due to the media overscares, but for the big picture, demand is still doing pretty darn well. For cash cattle pricing, as I mentioned before, we have had a seasonal peak earlier than normal, and that also, in my mind, means we'll have a seasonal bottom earlier than normal, perhaps maybe in May or early June, instead of later June or, in fact, into July for this market. And the market does seem to price this in mind. Keep in mind, June futures are still trading at a good premium to last year. One issue to point out as far as 2012 pricing is look at this end-of-year number here, this October and December. We feel that these declining placements, which will now start, will certainly prop up these prices October and certainly December more than where futures currently are right now here. But overall, we have some issues to watch on a short-term basis. That's wholesale beef prices and as well as live cattle prices. But on a longer-term basis, we will continue to watch these placement numbers and see if they decline here in the coming months. Overall, if you have any questions about this webinar or any questions like that regarding basics with the cattle market, feel free to give us a call here at Allendale, 1-800-262-7538. Thank you.